Not all ETFs are created equal. Pick the wrong one and you could end up paying more in fees, losing efficiency, or holding something completely different from what you thought.
That's why today we're breaking down the 4 rules to choosing the right ETF. A simple checklist that can save you time, money, and stress.
Rule number 1, always check what's inside the ETF. Don't just rely on the name, it can be misleading.
For example, take XLK Technology Select Sector ETF. It's heavily weighted toward giants like Apple, Microsoft, and Nvidia. Now compare that with ARKK, ARK Innovation ETF, which also invests in tech but focuses on different high growth and maybe riskier companies like Roku and Tesla.
Both sound like they're giving you exposure to technology, but the risk, stability, and performance can be completely different. That's why you always want to look at the top 10 holdings. Those usually tell you the whole story.
Rule number 2, pay attention to the expense ratio. This is the annual fee you pay the fund company for managing the ETF.
It might look small, like 1%, but over decades, those costs can add up and eat away at your returns.
For beginners, a simple rule is the lower, the better. Broad index ETFs often charge as little as 0.03%.
Rule number 3, check the ETF's size and liquidity.
Liquidity just means how easy it is to buy and sell the ETF without big price swings. Larger funds usually have tighter spreads, meaning you don't lose money just for entering or exiting a position, except for a small fee.
As a rule of thumb, look for ETFs with at least a few $100 million in assets under management. That usually ensures stability and lower trading costs.
Rule number 4, consider tax efficiency.
Some ETFs, like US stock index funds, are naturally very tax efficient because they don't trade much inside the fund.
But others, especially actively managed ETFs, might trigger more taxable events. And depending on your country and account type, that could make a big difference.
Bottom line, if you're holding ETFs in a taxable account, it's worth checking how often the fund distributes capital gains or dividends.
So let's recap. To choose a good ETF, follow this 4-rule checklist.
1, know what's inside. Number 2, keep fees low. 3, check size and liquidity. And 4, consider tax efficiency.
With this checklist, you'll instantly filter out the noise and avoid beginner mistakes. Watch these videos about the difference between ETFs and index funds and between accumulation and distribution ETFs.
And if you found this helpful, hit that like button so more people can learn about building wealth through investing, and subscribe to join us as we help you take control of your money and your future.